Michael, how are you?
I'm good, brother. I'm good. Thanks for tuning in again. Yo, we got people in the room already.
Yes. Currently 4 minutes past 8 p.m. UK time. What's good, people? Let me just check everything's working on the tube of you. Check.
Got the notification.
On the tube of you. Amazing. Everything is working on the YouTube side. Hello, what's good, people? It's your boy Fadlan, aka Ninja T. Welcome to another amazing episode of The Game, which is a free weekly financial literacy webinar covering everything stocks, crypto, macro, with a particular focus on industry reports. With obviously my blockchain sensei, CEO, co-founder, and originator of The Game, Mr. Hardin, and my blockchain sensei, co-founder, technical director, Keishan Rigg in the room. Before getting started, we're going to do a quick intro as per, reminding people, and especially because a lot of people come here for the first time, about what's going on in the blockchain sensei ecosystem, and then quick disclaimer. So we need three free webinars a week: Mondays, Fridays, Sundays. Mondays is our legacy show, The Game. Every Monday, 8 p.m. till 9:30 UK time since 2020, soon approaching our 200th episode later this year. NFT Friday has been running since April 2022, every Friday, 8 p.m. till 9 p.m, covering non-fungible tokens. And then Sundays is obviously our trading show with BitBlonde. If you're a Manchester resident, you can come to our in-person Createch workshop. We're currently in a 6-week crypto sniper bootcamp with our homies Landry and Nash. DM Shuriken Sounds, our subsidiary, on Instagram for the secret location, but there is limited spots. Click the link in the bio to go to superjoy.com/blockchain sensei for everything and anything you need for blockchain sensei. Join our free Telegram. Click this Zoom link here for Mondays, Fridays, Sundays. I know you guys love tuning in on YouTube and other platforms. Recommend you do come in the Zoom because we give extra alpha. And also subscribe to the Dojo, which is our subscription service. We will soon be changing. One second. Sorry, 1 second.
And this month, I mean, the next month's price cannot be today's price.
It cannot be today's price. No. Sorry, I'm
so
just.
if you were on the edge of joining the dojo, you need to do it now. Ninja.
Yes, let's tell them what to get in the dojo. So the dojo is the greatest subscription service you can get in all of crypto. It is the greatest because it is the only subscription service where you can speak to me and Jay almost every single day on a 1-hour webinar. Multiple times a week, you can also have access to Mr. Harding. I do think maybe we should change it to like one tier. I don't know if this is too confusing for people, but on the lowest tier, you speak to me and Jay you can speak to me and Jay 5 times a week. And then on higher tiers, you can speak to Mr. Harding and also get Forex signals from our guy, Yusuf, who in recent times has had like 100% win rate. I'm sure that's not going to be for absolutely ever, but I think that is sensational. So that's what you get in the game. And let's get into the disclaimer. Can you do the disclaimer? Or do you want me to do it? Or do you want to do it, Keish? Yeah? So, disclaimer. Terms and conditions. All content is for education, information, and entertainment purposes only. And it should not be considered as investment advice or recommendation to buy, sell, hold any assets, or place any trades. Please always do your own work, guys.
Yes, sir.
Yeah. Our content is intended and should only be used for informational use only. It's very important to do your own analysis before making any investments, which should be based on your own individual circumstances. You should always take independent professional advice from a professional advisor. Any of you guys professional financial advisors? Nope. Alternatively, independently research and verify all and any information you may find in our show that you may wish to rely upon, whether you wish to make an investment decision or otherwise. All investments come with war, guys.
Yes.
So please always do your own work, guys.
Research.
Yeah. Now the myself, Keishan Rig, Mr. Hardin, Ken, Real Trade, Munib, iPhone, A, and everyone else, Temerson, and everyone else in the YouTube, Twitter, etc. Are financial advisors. We do not intend to be perceived or received as financial advisors, but we're working in collaboration with several accredited financial advisors. If you're unable to mitigate your risk, let us know immediately, please, so we can refer you to an accredited financial advisor. Boom, boom. Okay, so today's the game episode, in celebration of Bitcoin hitting all-time highs ever in human history today, we'll be talking about ways in which to best navigate this crypto bull market. I know it can be very, very exciting, and I've just said it's not financial advice, but for those that haven't invested any money in crypto, let's just start with that. I wouldn't buy Bitcoin today because it is the most expensive it has ever been, which means, although it's not financial advice, financial data and statistics show through 300 plus years of stock market data that when assets reach an all-time high, they typically what, guys? At some point,
Pull back.
pull back. Exactly.
And why is that? What? Let's just break down the logic of that, because I think a lot of the times people don't understand the logic of a bear market, and they don't understand the logic of a stock going down.
Okay.
I don't think they understand the logic.
The logic is this.
Explain to them.
Every single person on planet Earth who invested in Bitcoin ever is now in profit. Even people who bought Bitcoin at 68,000 are like 4% up. So what happens, guys, psychologically to a group of people, aka millions of people who are in profit? What is a likely scenario to happen if every single person who invested in an asset is in profit? Whether it's 2% or 500%. What's likely to happen, guys?
Some people gonna take that
They're gonna
shit.
sell.
Yeah, they're gonna sell. So this is a fundamental concept amongst all assets. Now, if Frog, Llama, Inu, right, comes out in the degen market, right, and then it goes from 1 cent to 100 cents to $1, maybe it can continue to run up to $5, right? When there's only a few million degenerate Solanas or BNBs invested in this. But when you're talking about an asset that's now worth more than physical silver, it's got to take a drawdown at some point. So let's start off with that. Let me make my co-founders co-hosts as well. And 1 second. Boom. And then Keish. Boom. Sweet. You want to start this one off, or Keish or Mr. Hardin?
Yeah, I want to jump in on this. I think it's just about using logic. Like, I think this is going to be a very logical episode. It's not like we maybe might do some shills of some things, but I think it's just logic. Look, yeah, if you've just think to yourself, right? Everyone's talking about Bitcoin now, yeah, and it's now 79 grand, yeah. If I said to you, buy a pair of Air Force Ones, I've just bought them for £150. Do you want to buy them off me for 400? And I've won them. What are you gonna say? You're gonna tell me go F yourself. You're gonna tell me I'm a dickhead. So
no, I'm gonna say, can I negotiate a discount, please? Yeah,
exactly. So you gotta think of it this way. The Bitcoin you're buying now, if you're gonna try and buy it now, is secondhand and used. So do you really want to pay more than what it is? Yes, it's we don't know when it's gonna pull back. We don't know how much it's gonna pull back by. But like Ninja just said, it's very likely that people are going to take profit. Now, the second thing is what you've got to do, and Ninja, I think you're going to have to do your favorite thing in the world, is break down market cap versus circulating supply.
Oh my God. Are we going back to 2020?
You got to go back to the basics, bro.
Okay.
You got to go back to the basics.
Okay.
Because there's going to be new people watching this, either on YouTube, on LinkedIn, wherever we stream to, right? That will never have heard of market cap versus circulating supply. And they're going to be like, yeah, I might be able to 10x my Bitcoin in the next month.
Sure. Let's explain to the news. Let's explain. Yeah. Yeah. I'm going to do that. Just going to quickly share a quick Instagram post because this here is literally the definition of time in the market beats time in the market. Look, it's 2020, and this is what I was doing in December 2020. And 4 years later, no day off. I remember Aave being listed onto Coinbase and seeing it go from 40p to 56 pounds. And that's when I understood. I understood. You know what? It was around this time when I understood price equals market cap divided by circulating supply. This is, I remember it was like Christmas 2020. I was just like, why do prices go up and down? Like, what is the reason? Okay. So, look, it's very easy, guys. The mathematical reason, I feel like I've been saying this for so many times. The mathematical reason why all crypto is the price it is because it's simply the market cap, which is how much invested in the asset, divided by circulating supply, which is how many coins are in circulation. This is also the digital asset price formula for stocks. The price of stocks is just how much is invested in the asset divided by how many stocks are in circulation. Obviously, with stocks, it's bigger numbers, right? Multi-trillions and hundreds of billions, where usually cryptos, for the most part, are in the sub 10 billion mark. As soon as you go below Toncoin, from number 7 plus. But anyway, look, it's very, very simple. So the mathematical reason why Bitcoin 72K is because there's this much invested in it. Oh my God. The matrix attacking me. Copy. It is not letting me copy that number. Let me just type it in. 1400 1400 1400 123 123 123. Right, so 1.4 trillion divided by, let's call it 20 mils. 20 123 123. And that's the reason why Bitcoin 70K. Okay? So what you have to think is if you zoom out into the world, right, and you study a little bit of macro, you got to think how much money needs to be inserted into the market cap for the price to increase. Here's the overly simple formula. The market cap doubles, the price doubles. The market cap halves, the price halves. Not taking into consideration circulating supply, because if circulating supply doubled and market cap stayed the same, then the price would halve. But for the most part, circulating supply will remain the same or almost the same, so you don't really have to worry about it. But you have to think that there's been hundreds of billions of dollars invested in Bitcoin. All it takes, ladies and gentlemen, is $100 billion to be injected in, for example, and this is not me shilling, but let's say $100 went into Polygon. Well, that means Polygon market cap would then nearly times, well, it would times by more than 10, right? $100 billion injection into Polygon would times the price by 10 or 11. Does that make sense? Where there's tens of billions, potentially hundreds of billions on certain days into Bitcoin or taken out of Bitcoin. And that's why crypto prices are the prices they are. Cool. Yeah, I hope so.
just changed someone's life there, you know.
I know. It feels so tedious for me because we've been saying this like for years now, but movies can come.
But it is time. Okay, so we had a question about dollar cost averaging. Now, dollar cost averaging is my favorite thing in the world. I would not be as up as I am on any assets that I have, and my portfolio would not be what it is if it wasn't for dollar cost averaging, because this thing takes out all the stress and just means that time is, instead of it being your enemy, is your best friend. But it means you don't even know how wealthy you are if you do dollar cost averaging, especially if you can get it automated. It's just doing it, and investing it into what you told it to invest in, and boom. Now, in terms of what the dollar cost averaging, I'm not going to tell you what to dollar cost averaging, but I'm going to tell you what I dollar cost averaging, and it's public and it's out there for everybody to see. It's the top 10. That's what we dollar cost averaging. Well, that's what I personally dollar cost averaging for the Blockchain Sensei team, and to show the example of what crypto can do, because it doesn't take logic. Like, it's just not rocket science. If you're trying to have a stress-free life and still be up more than what you're going to get from your pension fund, what you're going to get from trying to trade and whatever, look, it's very unlikely, very, very, very unlikely that the top 10 of anything, the top 10 stocks, the top 10 football clubs, the top 10, like, whatever, are all going to be replaced in a 5-year window. And obviously, we're not working to 5-year windows, we're working to 4-year windows. So it's very, very unlikely. So, and then sometimes, just because of sheer market cap size, it's very difficult for those top 10 to disappear. And what ends up happening, let's say, for example, Apple, right? If Apple stock starts dripping down from the 2.5 trillion or whatever it is, right? And it dips down to 1.5 trillion. That's 1 trillion of cash that's got to go somewhere. Where's it probably going to go? Probably into the number 2 slot or the number 3 slot or the number 4 slot, or maybe even the number 8 slot. So it always kinds of balances itself out. So that is what I would say in regards to dollar cost averaging. I'm personally dollar cost averaging and have been dollar cost averaging into Bitcoin, Ethereum, Solana, BNB, Cardano, Dogecoin, Polkadot for the last 2.5 years every day. So it literally takes money out of my account every day. And then in the bear markets, it doubles it, and it's not just every day, it's every day. And again, it doubles that amount on a weekend, and then it takes that out as well. So it's just like it's like tax. So I don't even know. It's just tax. It's just gone. Like, it's money that doesn't exist. And then boom, you come to look at your portfolio a couple of years later. You're just nice. What it is, that's what I'd say. So yeah, that's my advice on dollar cost averaging. Super simple.
So the way I look at it is, your investment. You know what? I'm sick of saying the word investing and trading, so I'm going to call it asset management. Okay, right? So your asset management journey changes as your situation changes, as you change as a person, and as you become more experienced. So I 100% think that beginners should dollar cost average. I think until you are a chart sniper, until you consistently outperform the market, which I've only been doing for like 3 years or something, right? I've lost thousands trading and on bad investments, right? Until you've gone through the trenches of being highly profitable consistently for a long period of time, and you know in yourself that you can beat that market, you can buy low, sell high, then you should always have dollar cost averaging as part of the strategy. And I used to dollar cost average a lot in lockdown, because I understood that was a really great time to buy crypto. I understood the market crash, right? I didn't understand that much about crypto, but I understood enough that, you know, when Apple stock goes from $80 to $50, it's a global recession, right? So I understood dollar cost averaging then. Then in 2021, I still dollar cost average, but I dollar cost averaged a smaller amount of my portfolio. And then as every year or every quarter went by, and I got sharper and smarter, which is inevitable because being in Blockchain Sensei and being around Mr. Harding and Keish and other snipers, like, you're just gonna get good, right? And then eventually it got to a point where I don't dollar cost average. And the reason why I don't dollar cost average anymore, like, I tell, because I want to be honest, I don't feel the need to dollar cost average anymore because I'm on the chart every day, multiple times a day. So I feel so I've successfully beaten every single market return that I could have provided passively through anybody. And that's because I'm in a special position. So I would say to people, for beginners, absolutely dollar cost average most of your crypto wealth being available fiat currency available for investing. Like, it should literally be the majority of everything you do, right? Because what happens is, let's say you're a complete beginner and you spend 90% of your available capital dollar cost averaging and 10% trading and investing more actively, the market will eventually humble you.
Yep.
And then until you know that because everybody, like, there is no way that anybody is gonna enter this bull market and 100% dollar cost average everything and, like, not buy dips and not sell and not take some risks, because everybody wants to do that and everybody should feel that, right? So the best opinion that I can give everyone is you should have a percentage. Like, think about what your total investment budget is every month, every week, or whatever. Let's say the budget is £200. If you're a complete beginner, there should be like 80 to 90% of that dollar cost averaged, where you literally take the exact amount of fiat. Let's say you pick 4 altcoins: Bitcoin, Ethereum, Polkadot, and Polygon, right? For example, right? And you got £100, and the investment budget is like £200 a month. Then you should take at least 80% of that. What's that? 160, and then put 40 in your 4 coin picks and keep doing that the whole bull run. And it guarantees you a result. The point of straying away from dollar cost averaging, right, and bulletproof strategies is to see if you can outperform that strategy. But the truth is, most people, the absolute truth is, most people, unfortunately, watching this webinar, right, will not have the discipline, much like I don't have the discipline to go to the, like, much like I have failed discipline going to gym 4 or 5 times a week, right? Because I haven't been in 2 weeks, right? I know there's one thing in life that I'm disciplined in, and that's charts. But that's because our situation is very unique. For the average person, dollar cost averaging is amazing. And as you become more and more of a sniper, you can afford to dollar cost average less and be and trade more actively and have capital on the side ready to buy dips. But that fantasy is going to be a non-reality for most people watching, especially if you've taken time out of the game.
Mm-hmm. What would you say to well, your results summed it up, but trading versus investing?
Investing is, look, this is what it is. Everybody knows you should sleep, eat well, and exercise. That is what investing is, right? If you compare it to lifestyle, trading is like being a bodybuilder in the gym, and I'm a bodybuilder on the charts.
Yeah.
So that's what trading is. Trading,
yeah, unless you're willing to do the press ups every day and do the meal prep and do all that madness that comes with being with training to be a bodybuilder and doing the creatine and having the creatine and everything, then it's not for you. Some people want part of it, but they don't want all of it. And to get that end result, you got to do all of it. It's not a, yeah, you know what, I'm going to be a pro bodybuilder, but I'm only going to, I'm not going to do the cardio days when it comes to doing the trim for the show.
Yeah.
Because that's what people forget, you know. When it comes to bodybuilding, it's not all just bulking. When it comes to shredding season, oi.
Oh, you know what? This is one that I have to talk about, yeah. Retail, and what's very lucky about being a shareholder in Blockchain Sensei and working in this industry is that we can hear a lot of voices. We hear a lot of voices, and then we can come up with like a bird's eye market perspective, right? So let me tell you a voice that I hear retailers say all the time, especially with this funded trader revolution, right, where you can get funded capital. First of all, 95% of traders don't pass their funded challenge. So you know them funded companies are milking. They're literally able to provide capital because they make high revenue of people failing the exams. Right, so let's get that out of the way. Now, Mr. Harding, I know you know this one. Oh, I'm going to learn to trade, yeah? I'm going to learn to day trade. And then once I'm profitable and I'm making money every day, I'm then going to start dollar cost averaging my day trading profits into long-term investments. This is the biggest lie ever. Let me give you a more practical one. The more practical one that's less sexy is that you dollar cost average as a beginner into great investments while simultaneously learning about finances, investing, trading, and fundamentals. And once you've hit a lick, as in your investment portfolio is up at least 100%, you then take a portion of that investing portfolio and put it in a day trading account ready for you to burn. That is way more practical, but way less sexy. And nobody wants to hear that because everybody thinks they can jump on these charts after being away for years. Like, where have you been? You want to start day trading when Bitcoin's 70K? What's wrong with you? Like,
yeah, that's mad. That's actually mad that people do that. Like, guys,
I've heard that too many times.
I'm going to go back to the quote from Eman. Unless you can afford the education, you can't afford the investment. Because you're basically then gambling, and your odds are in your favor to get wrecked rather than in your favor to make money, unfortunately. Like, and again, the ultimate area why I'm going to second this is because people don't take blood clot profit.
Yeah,
and I have to rough up some students when it comes to this. You know, some students go from never investing in their life, get 100% return, get a 400% return,
and not actualize it.
And it's like, bro, where have you? Where all of a sudden do you now think you're such a big man or such a big lady that you don't need to take a 400% return in your first 6 months of investing ever? You were in debt. You were suffering from inflation, and like getting a 10% return for the year would have been sick for you. And now you're just like turning your nose up at 400% because you're waiting for this 40x bagger.
Even with 30%, people should be grateful for. People should be grateful for 40%. You should be grateful there's a machine where you can put £100 in and walk out with 140 in like a week, or 5 days, or sometimes 1 day. You know, that's a sensational machine if you learn to respect.
Yep. I think that's what it is, isn't it? The glamour. We're guilty of it as well. We post out these results and these numbers, and it normalizes it. But then, where are these said people in bear markets? Because I'll tell you what I'm doing in this bull market. I'm preparing for the bear market.
Yeah,
that's what
I'm already thinking about. Yeah,
I'm already thinking, all right, cool. So what am I going to dollar cost average into over this next bear market? That's what I'm thinking. I'm not thinking, oh yeah, this bull market's going to last for everything's going to be great for 2 years. Well, guess what? The reason why we know it's not going to be great for 2 years is because of what we just said. Basic logic. If these funds and institutions come into this game and then they turn their billions of dollars into tens of billions of dollars, do you not think that they're going to take profit? Or do you think they're just going to leave it there while retail take profit?
Also, I think it's worth noting this year that you should treat the markets like, I don't know if this is too intense. Tell me if I'm going too intense here, but me and Jay look at it. Jay, for those that don't know, Jay's my business trading and living with partner, we said that, you know, this is basically financial war. And I think I treat it like war.
Yes, Ninja.
I treat it like financial war because the market is not your friend. Everybody should know that when you put money in the market, the actual purpose of this market is to take money from retail. That's the point.
Let me add to this.
Making money.
Let me add to this. The exchanges that you used are designed for you to lose money. The trading systems and the algorithmic systems and everything that you're using in terms of looking at the markets are designed for you to lose money. I don't know if you know, there's a certain indicators that I teach for in my private lessons where the colors are switched up the wrong way. Selling is meant to be red, it's green. Buying's meant to be green, and it's orange. The indicators all messed up. Everything's designed slightly in a way where if you don't know what you're doing, you're going down the wrong direction. Certain spreads on trading platforms, the UI UX design of trading platforms are specifically designed for you to just quickly buy, and it's difficult as hell. It takes a little bit longer to sell, whatever it may be. You know, there's all these little tweaks, and then also we have to understand is that there's the institutions, and guess what the institutions have? They have your order books. They know exactly who's buying and selling, where, when, and then they can understand the flow and the patterns of the market from the very or books, like the order books themselves.
And
so
in crypto, they control the volume flow.
There you go. So that's what you're up against. So when it comes to looking at things from a perspective, I think people overlook that perspective and understanding the reality of things. And then also the chart in itself is made to hone and change your emotions. The charts was designed thousands of years by this Japanese guy, and it was actually a secret sort of encoding and tool that they used and kept a secret for hundreds of years until it then branched out and then got into the Western world. And then the charts in itself and everything based on the charts, it's mathematical, which is another thing that people don't understand or look at. And that's why all these indicators and things, and that's how all of these things work, and that's how you can see the patterns, etc. It's fractal. And then also another element to that I think is really important is that the way that it's designed is extremely simple, but it's taken many years of tweaking to make it hone and change your feelings based on emotion. So yeah, so when it comes to trading or when it comes to investing, two different ball games. Trading, that's what you're really up against. Investing, as Michael said, you're just going with the times and flowing with the times, and it's completely different ball game in terms of the difference of what you have to face.
See, investing is the testament of how long can you go without this money. And investing is almost like nothing is guaranteed in this life, but invest dollar cost averaging into, and obviously the word good is very subjective, right? No, dollar cost, I'm going to use the word good. Dollar cost averaging into institutionally backed digital assets that have passed regulation, including but not limited to Bitcoin, right? That's way more factual, right? It's almost a guaranteed long-term return, which is great because you want to be making money for sure than making money maybe, right?
Yeah.
But it's just how long can you go without that money? Because the problem is, as working class, I say this on behalf of working class people, which is myself, my co-founders, and also most people watching this webinar. Because if you were so rich, then you're probably too busy to watch the webinar. Do you know what I mean? Because you're already making all this money, right? So the thing is that we speaking on behalf of working class people, we don't go extended periods of time holding money. We're too used to getting paid, saving and spending, paid, saving, spending, but we're not used to firming an investment. Like, can you, dollar cost averaging and investing, the war is being able to understand that I bought this asset for, let's say, $30 last month, and this month I'm buying it for $20. But seeing your account in minus red, but still putting in more money, regardless of whether it goes up or down.
Mm-hmm.
And that's the mental warfare that you go through.
Yeah, 100%. Yeah, two completely different ball games. Trading is, as Ninja was saying, you're fighting the beast, and
Yeah.
you're becoming the anomaly, and that's not an easy task. It takes ultimate discipline, it takes consistency to the max, and it takes resilience, and then a super duper good level of understanding, due diligence, and yeah, that's what's really important. But yeah, I think, yeah, if you look at all of the trading systems and institutions that are out there and understand why they don't lose, it's because the game is ultimately on another level rigged because of the way that they sit on and leverage information. So and legally can do so. So I think that yeah, that's what you have to also keep in mind and understand. And yeah, I think, yeah, 100%. For all of the beginners out there, it just takes time to understand these things, learn and understand what the institutions are doing, and as a trader or investor, your aim is to be under the threshold of where everyone else is. So um, what I'm basically saying is there's always liquidity there for you because the price points that you're in at, you're below the market and under that level of resistance. So you can then have well under the level of support so that you can have that sort of security. So that's why I think investing long term is good, because after a long time, dollar cost averaging, your average price, if you look at that, you'll be under the market, and then from there, it's almost risk free, essentially.
I think the question
And
people are going to be asking is they're going to be asking, undoubtedly, is where should they be looking next? So, anyone want to jump on that?
it sounds like you want to jump on that, Mike.
Where should they be looking next?
Mhm.
Well, I'll tell you one thing that I would say for sure, where I'm definitely not looking, is I'm definitely not looking to put any money into Bitcoin. So that's me straight there. I'm definitely
Yeah.
not really trying to put money into Ethereum. Fortunately, I'm looking
Yeah.
at anything below the top 5 now.
Yeah.
Like top 5 will still do bits, but based on market cap, they just can't do as much as the other ones. Like it's the maths. The maths isn't mathing anymore.
100%.
Yeah,
No, I
that's
feel you. Well, yeah, for me, yeah, I don't look at things the same as everyone else. I don't like speculation. So at this present moment in time, the way that I operate and shift is a little bit different. So I would say yeah, I'm also looking at the sentiment of the people building in the space. That's what I look at now, more than anything. But yeah, how about yourself, Ninja?
Yeah, sure. So, let me share my screen. Okay, so I'm gonna break down the source, right? So, I'll actually break down the basic fundamental of my portfolio. Now, mind you, different portfolio sizes and different individuals, different depending on the size of your portfolio, right? Let's break them down in these categories. 3 figures, that's under 1,000. 4 figures, in between 10 and 10K. 5 figures, 10K to 100K, and 6 figures. In my opinion, if you have a portfolio that's below 4 figures, below $1,000, I don't feel like there's any point in owning Bitcoin Ethereum. If you haven't bought Bitcoin or Ethereum, I think now is not a great price. Yes, you could buy Ethereum today and maybe it runs up to 5K before the inevitable drawdown. But 20% doesn't sound that exciting, especially in an extreme risk on market like this. And then, yeah, so everybody under 4 figures, if you have Bitcoin, Ethereum, if I was you and I only had less than 999 available pounds or dollars, I would personally sell my Bitcoin, Ethereum into alts. If you don't have Bitcoin, Ethereum already, I wouldn't buy them. If you are between the ranges of, let's say, 1K to 10K, 1K to 10K, I think it is good to keep your Ethereum if you've already got it, right? But if you don't have an Ethereum, unless you're going towards 10K, like 8K plus, in my opinion, then it's not worth buying Ethereum, right? If you're on like the 8, 9, 10K side, maybe it's good to get like 10, 20% exposure to Ethereum. That's what I would say. But I know most people watching and most people here will have less than 10,000 disposable. So I will be looking at altcoins. Now, me personally, how I have my portfolio structured, and this doesn't apply to anybody with under 10K, in my opinion, right? So anybody in the 10K to 100K range, my personal portfolio is literally structured as following. The number one holding is ETH. And the second biggest holding, you're not going to believe. In fact, guess what my second biggest holding is, guys? Because I don't think even my co-founders know. I don't think I've even shared this. Guess. I'm so interested. Yes. Stable coins. The biggest mistake I made in the previous bull run is that I was on this cash is trash rubbish.
Yeah, man. You got to have the boat ready and loaded.
Yes, liquidity is absolute king. And I may keep this portfolio positioning for the whole bull run, maybe. I don't know, right? But for an entire year, since April 2023, my portfolio has not changed in structure. I can't believe I never even spoke to my co-founders about this, right? Because I suppose personal portfolio is kind of private. But literally, the basic formula is Ethereum at the top and stablecoin second and altcoins below. Why? Because I can't be living with the size of my portfolio, which is larger than a lot of people's portfolios. Not that I'm a whale or anything, right? But it's significant. I can't deal with fat 70% drawdowns in the majority of my portfolio. I can't do it. Maybe it's easy for people that don't have 10K, that don't have 25K, that don't have 50K, with their £900 say, well, if I had 100 grand, I would just bang it in this altcoin and it was times 10 and I'd be a millionaire. Cool story. Until you've got that money and you have to look at the screen. Huh? Yeah, that's cool. That's cool gambling because you need to understand that out of these three, which categories do you fall into? I want to exponentially grow my capital, and that should be for people with under 1K, right? Like if you've got less than 1K, in my opinion, you can be a degenerate. Like, why not? If you go from $900 down to zero, boo-hoo. You only have 900. Go work a shift. Go do 2 weeks work, and you'll get the money back. In my opinion, crypto is a great opportunity to excel your wealth. As soon as you start getting into 5K, 10K, you need to start thinking about steady growth. And when you go past that, when you start going to 25K plus, you got to think about wealth preservation, right? You do not want to be somebody with 25K and lose 5K in 6 days. You don't want to do that. That's not what you want to do. So, where am I looking, right? I am a big advocate in buying altcoins that are low from all-time high. It's a non-sexy narrative. But the majority of the altcoins that I own are literally the same altcoins that I owned in 2021. My biggest altcoin position, so literally this is my portfolio, Ethereum at the top, stablecoin second, right? Because I'm always trading my stables, right? I'll even do something where I will buy I'll buy a bunch of Solana, right, with stablecoin, and then it goes up, and then I just pull out my stablecoin. I'm relentless in putting in stablecoin and taking out stablecoin. Not here to overly hodl, and I need to protect the size of my portfolio. Okay, so I'm a big fan and a huge advocate in investing in things that have stood the test of time and are far from all-time high, because these are things that are close. There's no guarantee in crypto for anything, not even Bitcoin, but this is the closest guarantee that you can get to great gains. Okay, so things like DOT, right? There's a basic formula that I share with everyone, and it's called the theory of hypothetical return. It's a very simple mathematical equation. You take the all-time high of a coin, and this only applies to things that have lasted a few years, right? It doesn't work with meme coins unless it's Dogecoin, right? It might work for that. But even with Dogecoin, they made loads more. So I don't really know how it works with Dogecoin. Anything that's not a meme, right? And it's been around for years. You take the all-time high and you divide it by the current price. The all-time high of Polkadot is $53. Divided by current price is 11. That makes it a 5x multiple. Where do I think DOT's going to go in this next bull run? Probably 2x the previous all-time high. Why? Because the market cap's going to go to, in my opinion, at least 6 trillion on the low end, 10 trillion plus on the high end. Layer 0 interoperability, standing the test of time, blah, blah, blah. Cool. It's not financial advice, but in my opinion, I can comfortably put 4 figures into DOT at today's price. I can comfortably put $1,000 in Polkadot today, even though I feel like it's a bit undervalued and I could buy it at a better price. Firm a 40% drawdown, spend another grand and buy Polkadot again at $6 or $5. Most people watching would have been shaken out already. You invest in something, it goes down by 40%. It's a bad investment. That's literally how people feel. You base your entire investment thesis on marginal price action, which is absolutely. Yeah. Please be ready for 70% drawdown.
By a little 5% in crypto, or we've seen the crypto market go up by like a 10%, and there's people screaming in the group chats there's a bull market, or there's people in the group chat screaming and telling us that you need to sell or get out because it looks like it's going down. I've seen it. Anyway,
I'm gonna do one.
I need to say that.
I'm gonna do one quick call, right? You're gonna love this. So everybody knows that I am a bit of a Litecoin bull, yeah. Have been since 2021, right? Obviously, I don't hodl for no reason. I like it because there's price action. You know what I mean? But anyway, right? Mr. Harding, you are going to love this data set. Are you ready? Are you ready for this? Right? Look. So we're not even going to do the mad TA, right? This is nice. Obviously, we've had the overdue Litecoin pump, but this is how this is my data set on why Litecoin's gonna rip. Like rip beyond all-time highs the next bull market, right? Slow. Also, Litecoin is very far from all-time high. All-time high is like 400. Is it 400? 320? 320? 350. All right, cool. So 3.5x, not that far. But look at this, right? So for those that don't know, Grayscale is the biggest crypto asset management company in the world. And they have something called, well, they've got individual crypto trusts. So they've got these crypto products with single assets. By the way, everybody, if you want to know what assets to research everything in big multi-billion/multi-trillion dollar asset management companies, particularly the one that is the leading crypto asset management in crypto asset manager in crypto. And these guys own more Bitcoin than the US government and China, right? So anyway, they have these things called these crypto products, right? And these crypto products do not follow the price action of the cryptos. In fact, I feel like they are actually a future speculation of where crypto price actions go. Because look at this, right? Dude, the Grayscale Litecoin Trust has done 5x in the past 6 months. This is the biggest Litecoin trust in the world.
No.
And let me remind you guys that I said on another episode, on Technically Speaking, not the game, I think, on a Sunday, they have a Chainlink trust, Grayscale Chainlink trust, and in the same time, the Chainlink did 3x. This fund did 9x. Oh, I'm telling a lie. In 1 year, the Grayscale Chainlink Trust has done 20x, where the crypto has done 4, I think. Is it on 4? Chainlink in the past year. What's the annual performance? 1 year. One year is done, 3x. So the trust did 20x, Chainlink did 3x. Litecoin's gone up by 40%. The trust has done 3x. You do the math. I've not actually. Sorry, go on.
Math is suggesting that it's due a little bit of a pumpy.
Yes. In fact, here's some homework, right, that I'm going to set for myself and also the audience. It would be very beneficial for everyone to look up every single asset in the Grayscale single asset trust, which I think is only 14 assets, right? It's not that crazy. Like LivePeer is in there, XRP, Solana's in there. And then look at the price performance of the Grayscale individual asset trusts. Particularly pay attention to the multiples the trust has done, right? Look at the multiples, and you will find, if I'm not mistaken, because I've done this on a few of them, but not all of them, that literally the fund does multiples, and then the crypto does multiples later, but less. And I tried to get in the Grayscale Litecoin Trust, but you need 25 grand and to be an accredited institutional investor and then get a recommendation. And I thought that's a bit much. So maybe one day I'll be in the fund and I'll let you guys know. But where to look? Look at the institutional portfolios, starting off with Grayscale.
Maza. Oh, my guy's got the. Is that in Tesco? I was the BEM. He's a joker. So I don't think there's anything else to say apart from answer questions.
Yeah, say Q&As, man.
Yeah, I'm gonna get some hate because we got asked if the results that we've got now, we were getting these kind of results in October. And I was like, or 6 months ago, and I was like, yeah, we're in the stock market when no one was looking.
Yeah.
Oh, yeah,
So,
you could have done 4x on Meta if you bought it in November 2022.
Yeah.
Could have done 2x on Tesla if you bought it at the start of the year in 2023 and Valentine's Day.
What about Nvidia? with enough coverage on Nvidia.
Bro,
that one's been spreading.
Yo, just on that, most of our students are up 400%.
There you go.
But that's what it is. And again, that's what you got to understand is the cash that you profit out from the crypto bear market. The cash you cash out from the crypto bull market, there's places it can go to just double up again, People are missing the tricks. But yeah, I'm gonna post this in the chat and get myself in trouble. Because someone wanted to see receipts in it. So
wait, he wants to see receipts?
There's people in it. So I'm just like, all right, cool. You want to see? So here's my screenshots of me taking.
Bro, we've got 27 people on YouTube, bro. We've got like 50 people tuned into this webinar. This is crazy.
Let's go.
Bull market, though, isn't it? It's bull market.
Yeah.
Market time.
There's 27 people on YouTube, man. YouTube.
Where you been at? Huh? Where you been at?
What I would say, One, Ultimate One, and Ultimate Game. That I would probably say, just because this is what happens. Stuff that we've done months ago that no one cares about will be popping soon. Something we cared about very deeply for a long time ago, and someone's put it in the chat, is deeping. We were all over showing you, man, deeping. We were all over showing you, man, RWA, real world asset. We were all over gaming NFTs, all over it. Done show to all the players. I'm going to say in about 6 months' time, once Bitcoin started calming down, once the money's moved out of ETH, once it's gone into Solana, and once it's come out of Solana, these gaming NFTs, RWA and Deepin, are going to do a mazza, and people are going to be like, oh, I wish I got in early. So I'm going to suggest to people, go and watch past episodes. Go and watch past episodes. That's what I'm going to say.
There you go. And this has been the game.
Yeah.
Let's take some questions, man. Let's take some questions. YouTube. I can see there's 29 people on YouTube. Yeah, feel free to ask questions. We actually got a question half an hour ago that I missed. It said, what trading strategy is your go-to?
You can tell part of it, but then they've got to be in the dojo for the rest of it.
Yeah.
You got to go to the dojo.
I'll go to the dojo.
I'm gonna give some source here. I started off day trading in 2015. Okay, I'm a failed forex trader. I'm a failed stocks trader. Right? I listen. Sometimes I feel like I'm in crypto because I'm just really good at this market, and you know, I invest in tech stocks. Outside of crypto, the market that I really understand is tech stocks. But what I have is a vast network of people, and sometimes you can learn from osmosis, right? So I've found that in my experience, day trading doesn't work for me, and it doesn't work for most people. So if you are lucky enough for it to work for you, I, after nearly 9 years in this market, don't have the magic formula to print $100 a day. I'm sorry. Some people have the formula, but I don't have that formula, right? The way that I trade is that I like to trade on spot. So I almost never do futures. I almost never short the market. 95% of all my trading is spot trading and swings. Buy low, sell high. And my basic trading strategy is moving with the risk of the market. So there are times where I'll be more degenerate. And there are times like in 2022 where I'm not a degenerate and I spot trade amongst weeks and months a consolidating market. That's basically it. Spot trading, understanding when to be risk on and risk off, understanding when to be cash heavy, understanding when to have more exposure, and understanding when to cycle degenerate profits into long-term and long-term into more degenerate profits into stables. And that's what I cycle between.
So my trading strategy is, most people know this, it's in the free web. There's literally people that have taught themselves to trade and become profitable off the free strategy that I put out on YouTube. So nobody can tell me that it's not there. It's definitely there because I've met these people in person and they shook my hand. Thank you to Ninja for hooking that up. And we're like, yeah, we taught ourselves to trade off your YouTube lessons. So it's out there. So real basics. I do mine based on the numbers. And the numbers suggest that the most successful trading strategy with an over 80% win rate from using it is double tops, double bottoms, and then the head and shoulders patterns. So why am I looking at anything else if they have the highest win ratio of over 80%? Why am I even looking at all these next stuff if they don't have that win rate? It just doesn't make any. You're wasting your time trying to learn all these other things if the thing with the highest ratio is told to you. Why would you go and try something that has a ratio of 20% success rate? Why are you trying it for? If there's something with 80, yes, it's boring, yes, it's simple, but It's got 80% win rate. 80%. Like, even if it wasn't 80, even if it was 60, that's crazy. That's more than 50. So, and if you can't get it and you're getting less than 50, that's because you haven't quite understood something. And that's where things like the RSI can come in. That's where things like the moving averages can come in. So, and then if you know me, everybody in the game knows I've got a set risk to reward ratios that I like. And I'm not trying to
40 to 1s, man.
Mac and his straw, it's the straw.
If it's not
So
10 to 1, he's
I
not
might-
taking the trade.
I might not get a win for a while, but when I do, it's a whole mazza. Get me? That's what I'm looking for. I'm looking for, you know what? I can take 10 of these trades and only one of them needs to pay off. 9 of them could lose and I'm still nice.
Yeah.
But if 2 of them pop off, ooh.
All right, Mike, don't do that again.
So,
Don't do
yeah.
that again, please. I don't want to see that.
So sometimes you might see me on stage and I'm a little bit more energetic and enthusiastic. That's probably why.
Also, can I just?
Because I'm not very public with my nature.
I'm just gonna out somebody on YouTube. Yeah, somebody said AMPL will melt faces. This is exactly the kind of comment that you want to avoid. Basically, avoid everyone in crypto who is overly bullish on a singular project. Let me tell you straight, I have no loyalty to anybody. I'll dump on anyone and everyone, right? I don't care to hodl too long when when I know price is coming down. At the end of the day, I'm going to say this trading strategy as well, right? My trading strategy, long-term or investment thesis is how can I get more Bitcoin, more Ethereum, and more stables? Because that is the trio. That is the trio of...
Yep.
Hello, Ninja, you there?
Yeah. Yeah. And also remember to never ever get attached to any asset, and don't love assets because they don't love you. Like don't even love Bitcoin. Bitcoin doesn't love you. Vitalik doesn't know you. Charles Hoskinson doesn't know you, right? Charles Hoskinson doesn't care about you from Cardano. He's living his life, right? Everyone is just here to make money. So please avoid everybody who puts a crypto in their bio and they say XRP army, BNB army, this army, AVAX army. There's no army. It's financial war, right? And there is a good time and bad time to buy assets because at the end of the day, right? Look, this is how crazy it is, right? If Bitcoin is 70K and right now, if somebody said you've got 1K, right, and you can invest in Bitcoin or Dogecoin today and firm it for 1 year, I'm buying Dogecoin. I'm going to buy Dogecoin because it means that I can do more of a mathematical multiple against my money. Please get away from the noise of anybody who is overly bullish on any singular asset. And I've learned from this as well to not to be asset agnostic. And if you become more asset agnostic and less asset bullish, when I say Litecoin, I don't care about Charlie Lee. I don't care about the LTC network. I just understand that that is something that is undervalued right now in a market that's pumping. If Litecoin was 300, I wouldn't say that. I'm just saying this is now it's 100. I don't even recommend it at today's price, right? I was just saying that 60, 80. Sorry?
I think people fail to forget is that basically most blockchains are very similar to operating systems. So it's like going, I'm only going to use Google ever.
Yeah.
I'm not going to use anything on the internet ever if it doesn't have Google attached to it. Never. I'm not going to go on YouTube. I'm only going to look at YouTube, Gmail. What else are they on? That's it. So that would mean you can't use WhatsApp, you can't use Instagram, you can't use TikTok. That's what the equivalent of being a maxi is. So you got to kind of understand what you're dealing with in terms of real world application and mass society and mass consumers. It is very, very, very next to near impossible that you're going to get the whole world just using one thing. It's
Mhm.
very, very, very. The closest person to do it, the closest company is Microsoft. They've got the furthest. So apart
Yeah.
from that,
Le-
and even they don't have everybody. So they've got ops.
Yeah, so let me add to that a bit. Just to let you guys know a bit about my strategy. I'm a bit more of the, I guess, the advanced level type stuff. A bit more complicated. I look at, when it comes to technical analysis, I'm looking at where the buyers and sellers are. Very simply, where are they? What points in the market are they at? So that I understand exactly where the price point could go to in a good scenario and where it could go down to in the worst scenario possible. I want to know where the liquidity is at as much as possible. And I have a bunch of different indicators that I use for that to understand that. And then I want to look at what the direction of the market is in terms of what direction it looks like it's going to be going into. Aside from that, when it comes to deep DeFi stuff, I like staking, I like compounding, and I like swing trading. And I do those things all at the same time. So I stake multiple different assets in liquidity pools, and then I swing trade them at the same time as they are staking and yielding. So yeah, that is extremely aggressive strategy, just to let you guys know. But yeah, I think that's a little bit about my strategies and sort of the way that I look at things. So yeah.
Big. Right, let's wrap it there. Any questions from anyone?
Yeah, I have one for Kish.
Go on, go ahead. Keish, you got a question?
Yeah, Kish,
Okay.
you talked about that rigged candle charts initially, just when we started, right?
Yeah.
Yeah, could you say something about that? Like, what's going on with that? Because earlier Japanese were using this, the rice traders were using candle charts to figure out the supply and the demand, and
Yeah.
the candlesticks have been the most, most promising, I would say, technical analysis so far. Uh, and when you
Yeah.
say it is kind of right now getting rigged and all, but could you say something more about that?
Can I?
Yeah. So go ahead, Mike. Go ahead.
So, amiga. So there is multiple YouTubers and ourselves that have evidence that the candlesticks change. So a candlestick may be printed for you, the public and retail, but it's not actually necessarily what it actually is. And then what also happens is a candlestick will print and you'll take a screenshot, and then a couple of months later, you'll go back to that time frame and the past data is wrong and it's different. And you're just like, you only see this if you've been in the markets for long enough and you're watching it long enough. You're like, I swear I put a stop loss at the bottom of this candle, and you'll go and look at something in it, and it's there on your screenshot, but then on the chart it's not, and you're like, they've changed the chart.
Mhm.
What the hell? So yeah, it's I can see Sebastian laughing because he's probably experienced that as well. You're just like,
Yeah.
at first you think you're going crazy. At first you're like, what are they like attacking me individually? Like it's a bit of a mad one, but yeah, that's where like you realize that this is definitely one big game, and you got to be careful what you think is real, kind of. But Keish, sorry,
Yeah.
I had to chime in on that one.
Yeah. 100%. Yeah. There's that, and then there's the institutions. In terms of what I mean by the game is rigged, is that they know exactly how far someone's in on a game. So they know how deep their liquidity is, which means they know how to manipulate themselves to acquire that. And they know where the gaps are in the market that need to be filled to acquire that as well. So essentially, the level of data that they are working with and playing with is completely different to those of retail. They're more in the dark, I would say, unless you got someone who's got a developer background that can build out and create their own data sets. It's not going to work out. So that's sort of what I mean when I say the game's rigged in that aspect. So yeah.
Can I ask a question?
Go on,
Yeah,
Ben.
sure.
Yeah, no, basically, no, what you were saying about the trading is really good. And I was gonna say, like, if anyone that wants to go trading, I would definitely recommend going on a dojo call and blockchain Sensei because how I've been profitable literally is all thanks to Jay, Michael Hardin. Michael Hardin taught me first thing about RSI, and then combine that with the Fibonacci and the divergence has really helped. So I definitely recommend that. And then basically, like what Keisha was saying, that it was rigged. I was gonna ask that because one thing I noticed, like with the charts, I kind of suss things out. Like, say for example, when data comes out, like so for example, like if unemployment comes out, that's basically kind of means that controlling inflation. One thing I've noticed that whenever like good bit of data comes out, the market always dumps first, and then as soon as the data, as soon as like unemployment, like let's say unemployment comes in higher than expected, the market pumps. So do you reckon these institutions must know the first hand that data, the outcome of what the data is going to be?
Oh yeah, yeah. I didn't even mention that. Oh my. Oh, have you ever been on Forex Factory?
Yeah,
Like
that's what I go on.
before?
I've got an account there. I subscribe to them. I always go on there when I do my trades. I always check them. Check the first,
Well,
first thing in the morning.
you know that on Forex Factory, you know what's happening in the news and how it's going to affect the market.
Yeah.
A week, 3, 4, 5 days before it actually happens, right? Imagine if you're a politician or someone that works on the inside with regulation and the structures of different things, what type of information you would have if Forex Factory has the information and data points for the public that is accessible to the public 3 or 4 days before things actually
Wow.
happen.
So these guys know way beforehand.
Months beforehand, they've got literally
Oh,
calendars that tell them what dates things are going to happen and what prices they're going to be at. It's a whole different thing.
I'd say about 12 months
So just
before.
imagine like big worlds have got money who know data's coming out. They could just easily sell their crypto assets and then buy back when
Yeah,
the
Yeah, they know.
they put the data out. Yeah.
It's a different,
Data's out. Yeah.
different
There's
game.
missing parts like before data comes out. Certain things are dumped. I'm thinking, okay, if this price is dumped, I'm thinking something's good. So the data must come out good. They already know beforehand that data is going to come out good and it's going to pump again.
Yeah.
Yeah, it's rigged,
Yeah,
man.
It's
This game is different.
it's I would say it's not rigged on purpose. I was explaining to someone earlier. It's rigged because of human nature. And human nature is that we want to preserve ourselves and our families. So let's say, for example, I want my kid, all my friends that I'm working with, everyone on my road, all their kids go to the same school and they're all on the same basketball team. And my kid's crying every single day because they can't go to their basketball games and not part of their group, right? And then I find out that there's a guy that works for a banking firm or whatever, and he's next door and he comes to my house for barbecues and whatever. And by chance, I work at one of these firms where we're doing the data. Yeah. I'm not meant to tell him anything, but he's just gonna be inquisitive and ask me certain questions. And I'm not gonna tell him the answer, but I might be like, well, I don't know if you're right about that. When you think that it's gonna be that the interest rate's gonna go up. Probably double check on that. That's not giving the answer, but it's giving him an indication. But me now giving him that indication, guess what happens? He's now in a position where he sits on the board of that school. He now gets good results financially based off just the indication. He's going to come back to me and go, you know what? I can get your kid in this school if you can actually give me the actual information. What's he going to do? What's she going to do? We're going to give the information to get the kid into that school.
But yeah, this is we're talking like flipping MI6, MI5 level type of information and plays and things that happen. But this is actually how it goes down. Yeah.
Human nature. That's all it is. But yeah, let's get some questions from some of the people in the audience because I think we got some new people.
Yeah,
So we got
some
Wade.
newbies.
Yeah. Fire away. Who was that? That just unmuted.
It was me. I
I,
just said, yeah, we got some new people.
Oh, okay, cool.
yeah,
Let's start with Sebastian.
yeah.
Thank you.
I just want. I just wanted to add the way I also prefer to think is to think in terms of wealth. So, for instance,
Yes.
yeah, you said some great advices about everything that you said. It was nice, but I'm also, for instance, when I'm thinking about the biggest projects, like you just said, Bitcoin, Ethereum. Yeah, I mean, about Solana, honestly, I don't know that much. I wasn't into that space. I know about not enough. So the way I was looking at the big projects is like I try to understand the big macro news and movements. So, for instance, the real estate, I noticed that it's linked to Bitcoin.
Yeah.
And yeah, so Bitcoin basically at the moment it's almost fully institutional. It's big players, big whales. So basically, in order to be successful, if you want to to put some money into Bitcoin, yeah, you need to understand their narratives, how they think. So basically, it's like a mind game. We are in the matrix. Let's say we are Neo, right? And we want to get into the agent. So it's to get into their thinking. So yeah, I think it's important in a way to try to somehow link to their mind and understand their narratives. And I think this might be the key if you want to follow the path. I mean, that's what I've been doing. Yeah, sometimes obviously I'm not always right, but it seems to work and not that bad. But as you said, I think it's good to look at the smaller players, like small projects, because it's a big potential there. For instance, obviously we can't play with big whales, or at least me, I can't. I wish I would have more cash to play with them, but no, I can't. So that's why I'm looking at even at NFTs, right? Because there are one of one NFTs or collections with, I don't know, 300, 500. Yeah, a lot of collections now, if you notice, are up to, let's say, 800 NFTs, and not like 10,000 like it was before. And I think it's better in this big way because it's less wash trading and it's more real data. And it's the same thing with coins, right? So I'm looking now at coins that have like a very limited circulating supply. So it's probably like 100 or 1,000 or 10,000 circulating supplies, which is not that. It's not a lot, but what it means that for instance, if I have few Ks, I can make an impact into that ecosystem. And yeah, so it's win-win not only for me but the other small players in that ecosystem with coins. So that's why I'm looking especially on new coins to see, yeah, try to engage with the team. Maybe they have a Telegram group. Go on their Telegram, try to engage, have fun. Why not, to see what people are behind the project? And yeah, I think it's a good way to see the things in this.
Oh, love it. How did you discover the webinar? Was you in the Telegram chat?
So yeah, it was. I'm not sure exactly when it was, but I remember you started doing them at the DLT in
Yeah.
London.
I know who you are. I met you at the DLT and I met you in Birmingham. But I'm saying, how did you find the webinar? Like, where did you find the link? We're just trying to figure out how people.
On Telegram, on the group.
Okay, you found it on Telegram. Okay, cool.
Yeah.
We're just trying to track where most people come from, because we're seeing that most people are coming from the Telegram and not from Twitter. So I think it's pretty likely we're shadow banned on Twitter.
I would definitely shadow ban.
Honestly, I'm not using
Twitter. Stop saying it. No, we're good with Twitter. We love X. We're good. They love us.
I like it. I love Twitter.
No, that energy. No, I don't accept that energy. They love us. Yeah, we're not shadow banned.
I didn't say
it.
Bro, I have a story to tell how I found you guys, bro.
Go on.
Yes, please go ahead.
I saw Fadlan. I'm not sure. I saw Fadlan on Twitter, I think, live or on YouTube. Yeah, on YouTube, I saw him live, and I saw him wearing those sunglasses. Right, he wears those sunglasses. Right, I thought
Good job.
he's some Chinese Bitcoin big miner. I thought he's a big
Yeah.
Chinese Bitcoin miner. He's saying something,
Yeah.
and I should pay attention to what he's saying.
I've never liked Bitcoin in my life, bro. And I'm Indonesian. My camera.
Bro, I thought that this guy is from China and he's wearing some cool sunglasses, and I thought he's holding some crazy bitcoins mining over there. I thought let me listen to him. What's he saying? And I told him on the YouTube. I asked him question, and he said that I'm not in. He redirected me to the Zoom. He gave the link in the chat, I think, or I went to the Instagram, found you guys that way.
Amazing.
I was amazed with the looks of Fadlan, basically. Like what's
Wow.
he trying?
Ninja, you need to bring back the glasses.
Wow, yeah, I need to. My camera's not working right now, unfortunately. But I will aim to wear more sunglasses because obviously it brings people to the webinar.
You got to give the respect to Jay Johnson for that one, bro.
Yeah, 100%. Yeah. If it wasn't for Jay Johnson, I wouldn't wear sunglasses as regularly as I do.
There you go.
He gave them.
I gotta get Ninja more glass. We gotta take Ninja to our glasses spot, Mike. We can't disclose it on here, but
if you know anything about me in live events, people
my glasses. Love it. Yeah.
It's a blockchain sensei trademark. We all got the maddest glasses. But let's go to Wayne's World. Wayne's World, you got any questions? Nope.
No, sorry.
Oh.
No questions. I'm just watching, observing, seeing how you guys getting on, checking in, comparing, just seeing how the market's going. It's all positive, good stuff. I'm just staying engaged, really.
Thank you, man. Thank you for tuning in again. I believe there was somebody called A, but if they just left, A's just left. Okay, cool. So next person to ask a question to is man like J, Mr. JG, the one and only Big G. What are you saying, broski?
I'm good, man. How are you?
I'm good, bro. You always give us some moonshots whenever you talk, bro. Whenever you talk, bro, you drop gems, but I don't think most people realize.
I mean, that's, it's the same. I've been just listening intently today, man. I've been really enjoying it.
Thank you.
Really enjoying it. So, always have to give my flowers to Blockchain Sensei and just like an integral, I love that word, integral part of my journey. My financial warfare journey.
Yeah.
It's just like what someone was saying before, there's levels to how he's talking about certain things are rigged within the system, with all systems, but there's just levels to stuff, man, and it's an understanding and an overstanding,
Overstand.
Oh,
I love that word,
Yeah. So I just think it's just great. Like I said, they just always have to try and make the effort to just tune in and just keep learning. I think the knowledge is the key, man. It's especially now we've entered that kind of time frame where we're in a price discovery. It's just like price discovery is gonna be like bag sex for the first time.
Wow.
Let's see what happens.
People are gonna be busting all kinds. It's gonna be a mazza. Is there anything that you're looking at the moment, or you're researching, or a sector or space?
You know what? It's funny because I'm actually a bit more focused, like, on something you were saying yourself about the next bear market. I wanted to be in this position where I'd bought, so I feel like now I've kind of taken a little bit of pressure off myself, still continuously dollar cost averaging at times, but I'm really I'm looking at, like, places to take profits and things to be buying for next bear market coming around,
Yeah, man.
But also saying in the present, definitely being in the present with it.
Yeah, man. That's big. And then to wrap up, I'm going to answer Temi's question. Thanks for that, Jay. So Temi's question was, when do you expect the lows to be? Looking myself historically, it looks around 30 months after the all-time high. I don't think it's going to be 30 months. I think we are in a time compression at the moment, and all time is being compressed faster than it's ever been compressed before, just because technology, communication, information, and human interaction is moving faster than it's ever moved before. So things that would have taken certain time frames just aren't going to take those time frames anymore. And I think, number one, things might go higher than people expected. Number two, I think things won't go as low as people expect. And number three, I think things will happen quicker than people expect. So just because there's more experience, there's more money, there's more time in the game, there's more. So it can't be the same. It's just not even possible. In my head, logically, again, this is me thinking logical in a space that is very highly illogical. It doesn't make sense, again, based on human behavior, based on nothing else but human behavior. It can't go down as much because there's going to be more people aping in like idiots that have lost their wallet addresses and their seed phrases than ever. So therefore, it can't draw down as much as it did before. It's just not even possible. And then the same thing with the amount, the speed that it's going to happen. There is people that missed the last Bitcoin bull run that are going to be FOMOing now, and therefore, therefore they're going to rush in quicker as well. So everything's just going to happen a little bit quicker than people think. So yeah, that's my my final parts there. Thank you very much. Thank you very much, everybody. I've got to bounce because I've got to go do a dojo call now. So peace out.
Guys, just to promote the dojo, I'm going to promote the dojo a lot this month. The dojo call that I run is, I run them 5 times a week, but specifically Mondays, 10 p.m. till 11 p.m. after the game. I'll bust you guys the Zoom link. Jay, I think you specifically would love the dojo. If you message me personally, I'll tell you when they are, and then you can try it out. And this is where me and Jay break down actual trades and investments, show the real life trading account. So I'll see you guys in half an hour. And if you get a high subscription, you can also talk to Mr. Hardings on Monday, 9:30 to 10:30, where he does this ultra market analysis. Thank you very much, guys. We'll see you guys soon on NFC Fridays. Take care.
Bye-bye.